All right, let's talk about one of the most powerful yet simple tools in all of trading. We're going to pull back the curtain on support and resistance and learn how to see the hidden patterns within what looks like market chaos.
Okay, let's be honest. When you first look at a price chart like this one, it can just feel like a total mess, right? A bunch of random zigzags going up and down with no real logic. But what if I told you that it's not random at all?
See, there's actually a hidden language being spoken in the markets every single day. And the key to understanding that language, to seeing the story it's telling, boils down to two fundamental concepts that every pro trader lives by: support and resistance.
So what are these levels really? What are these lines on a chart that seem to control where the price goes? Well, let's break down the absolute bedrock of what we call technical analysis.
First up is support. The easiest way to think about it is like a solid floor underneath the price. As the price drops and hits this zone, a whole bunch of buyers tend to wake up and say, hey, that's a good deal. They jump in, and that sudden buying pressure acts like a trampoline, often pushing the price right back up.
And you guessed it, resistance is the exact opposite. It's like an invisible ceiling above the price. As the price climbs higher and gets near this zone, sellers start thinking, maybe it's time to take some profit. They start selling, and that pressure can stop the rally dead in its tracks.
Now, here's what's so fascinating. These aren't magic lines. They're not based on some complex formula. They're literally a map of human emotion. They represent the market's memory, all the points where traders wish they had bought or kicked themselves for not selling. It's all about psychology.
And this psychology leads to one of the coolest and most powerful principles in trading: the role reversal. When a price doesn't just tap a resistance ceiling but smashes right through it, that old ceiling often becomes the new floor. It flips its role and becomes a brand new support level for the next move higher.
Okay, so we get the theory, but how do you actually find these zones on a real live chart? Well, the good news is you don't need to be a genius. Let's cover 3 of the simplest and most common ways to do it.
We're not going to get lost in the weeds here. We're going to focus on 3 practical techniques you can start using today, looking at old swing highs and lows, drawing some simple trend lines, and using a popular indicator called a moving average.
The first method is probably the most intuitive one. You just look left on the chart. Seriously, wherever the price made a major U-turn in the past, a big peak or a big valley, that's a natural place to watch for reaction in the future. The market has a long memory.
Now, of course, markets don't just move sideways. They trend. And when a market is in an uptrend, you can literally connect the dots between the rising lows to create a support trend line. In a downtrend, you do the opposite. Connect the falling highs to create a resistance trend line. It's that simple.
Moving averages are another great tool. Think of them as a smooth, curving line that follows the price. They act as a dynamic level of support or resistance. Traders love to watch for the price to pull back to a popular moving average and then bounce off it to continue the trend.
All right, time to get practical. You've identified your key zones. You've drawn your lines. So, now what? How do you actually turn this into a trade? Well, there are really 2 main game plans.
You can either play the bounce or you can play the breakout. Playing the bounce means you're betting the level will hold and the price will reverse. Playing the breakout means you're betting the level will fail and a big new move is about to start. They're 2 totally different approaches for different situations.
So if you're a bounce trader, your best friend is patience. You don't just blindly buy the second the price touches your support line. Nope. You wait for a little signal, like a specific type of candle pattern that tells you, okay, the buyers are here, they're defending the spot. That's your confirmation. For a breakout trade, you're looking for the opposite. You're looking for raw power, a huge, confident candle that closes way past the level. And here's the kicker. You want to see a big spike in trading volume. That volume tells you that the big players are behind the move and it's not a fake out.
Okay, now before you get too excited and start plastering your charts with lines, we need to talk about some really important rules and common mistakes. This is the stuff that can save you from a lot of unnecessary pain.
First, and please burn this into your brain, support and resistance are zones, not laser-thin lines. Think of them as blurry regions. The price can, and often will, poke through your line a little bit before turning around. So don't panic. Give it some breathing room.
Second, always check the volume. Volume is like a truth detector for the market. It tells you how much conviction is behind a move. A breakout on massive volume? That's something to pay attention to. A breakout on almost no volume? Be suspicious.
And third, Understand that the strength of a level can be tricky. The more times a level holds, the more important it becomes. But think about it. If you keep hammering against the wall, each hit might make it a little bit weaker, right? It's the same idea here. Each test could be the one that finally breaks it.
Look, no matter how good your analysis is, you will be wrong sometimes. Everyone is. And that's why you have to avoid the #1 mistake that destroys trading accounts. You must use a stop loss. It's your safety net. It's non-negotiable.
So let's wrap it all up. Support is the floor, resistance is the ceiling. They're created by market psychology, fear, and greed. You can find them with old turning points, trend lines, and moving averages. You can trade the bounce or the breakout. And most importantly of all, always manage your risk.
At the end of the day, these lines aren't some kind of magic crystal ball. They're simpler and way more powerful than that. They're a map of what the crowd is thinking, a roadmap of fear and greed. The only question is, are you ready to learn how to read it